Hi friends, welcome to the 7th lesson of the Alton Academy. Today, we will dive into one of the most interesting and important topics in the world of cryptocurrencies, digital assets or tokens. It's not just a technology, but the foundation of many modern ecosystems that are being built around blockchain. What are tokens? How is it different from a regular coin like Bitcoin? How are tokens related to these things, like NFTs, which have captured the world's attention? Why do tokens play a key role in innovative areas like decentralized finance and gaming? In this lesson, we will look at what types of tokens there are, what categories they are divided into, and how they function in blockchain ecosystems. You will learn what lies behind each of them and why they are so important for the future of the economy and technology. After this lesson, you will have a clear understanding of how digital assets work. You will be able to confidently analyze tokens, their applications, and understand what they mean in the blockchain ecosystem. How digital assets work? You will be able to confidently understand tokens, their applications, and what they mean in the blockchain ecosystem. And most importantly, you will understand how to apply this knowledge in practice. Let's begin. Let's figure out what it is: coins and tokens. These two terms are often used in the world of cryptocurrencies, and although they are sometimes confused, it's actually quite simple. Let's start with an explanation of coins. Coins are cryptocurrencies that exist on their own blockchain. For example, stake Bitcoin. The first coins were created on the basis of their unique network. This network uses blockchain technology. Transactions are grouped into a block, and blocks are linked together in a chain. This structure ensures transparency and data protection. Coins include popular examples like Ethereum, Dogecoin, and Litecoin. These cryptocurrencies operate within their own blockchain networks and perform key functions. For example, they are used as a medium of exchange and a tool for storing value. Bitcoin is referred to as digital gold for its role in preserving capital, while Ethereum has become the foundation for creating decentralized applications. Now let's take a look at tokens. Unlike coins, tokens are created on existing blockchains. For example, USDT or Tether, tokens that operate on the Ethereum platform. Its purpose is to be a stable digital version of the dollar, convenient for use in the crypto economy. Tokens emerge thanks to smart contracts, which allow for setting the rules of their operation. For example, tokens can be the in-game currency, a voting tool in a decentralized organization, or a digital representation of real assets like stocks or real estate. In addition, tokens provide access to various applications. For example, to participate in DeFi projects, buy NFTs, or vote in a DAO, you may need certain tokens. This is how easily you can remember the difference. Coins are independent cryptocurrencies that operate on their own blockchains and are most often used as a medium of exchange or a store of value. Tokens are created on already existing blockchains and can perform many other functions, from providing access to applications to representing real assets. Both of these tools complement each other and are key elements of the crypto economy. We've already discussed what tokens are and what role they play in the cryptocurrency ecosystem. Now let's dive deeper and take a look at the different types of tokens and how they differ from each other. Let's start with utility tokens. Their main task is to provide access to services and functions within specific platforms or ecosystems. Imagine that a utility token is like a key that opens doors to various benefits. Unlike investment assets, it serves to perform specific functions. For example, Binance Coin or BNB. This is a utility token from one of the largest cryptocurrency exchanges, Binance. It allows you to pay transaction fees with significant discounts and participate in exclusive promotions on the platform. For BNB holders, this means favorable conditions. By paying trading fees using the token, users receive significant discounts. This is especially useful for those who trade frequently. In addition, BNB provides access to token sales and launchpads. These events allow you to buy tokens of new projects at an early stage, usually at lower prices. Then on open markets, BNB is not the only example. Uniswap and AEVE tokens also provide access to unique features, such as voting for protocol governance or participation in bonus programs. Utility tokens are designed for functionality, not investment. They help save money, participate in ecosystems, and gain privileges. They create additional opportunities for active participants in the ecosystem, but their main goal is functionality, not investments. Thus, utility tokens help save money, participate in ecosystems, and gain additional privileges, making the use of crypto platforms even more attractive. Let's dive into stablecoins, making the use of crypto platforms even more attractive. Let's take a look at stablecoins. These tokens are different in that their value is pegged to real assets, usually to fiat currencies like the US dollar. The main goal of stablecoins is to maintain price stability, which makes them a reliable tool in the world of cryptocurrencies, where prices often fluctuate. Popular stablecoins include USDT, known as Tether, USDC issued by Circle, and DAI, which is backed by smart contracts. These tokens aim to maintain a value close to $1, making them versatile and convenient for various tasks. When the cryptocurrency market experiences strong volatility, stablecoins remain stable. This is especially important for traders and investors who want to protect their assets from sharp declines in the value of other cryptocurrencies. Stablecoins are often used to stabilize a portfolio. If you see that the market is unstable, you can convert your assets into stablecoins to preserve their value until the situation improves. In addition, stablecoins are convenient for transferring funds. For example, by using USDT or USDC, you can quickly and safely transfer money between exchanges or users, avoiding losses due to price fluctuations. Thus, stablecoins play a key role in the crypto economy. Avoiding losses due to price fluctuations. Thus, stablecoins play a key role in the crypto economy. They help minimize risks and enable quick financial transactions, serving as a link between traditional money and cryptocurrencies. Let's take a look at payment tokens. These are cryptocurrencies created as a digital alternative. Traditional money. Their main task is to provide fast and convenient transactions. Bright examples of such tokens are Bitcoin and Litecoin. Payment tokens. Tokens like Bitcoin have revolutionized the world of finance because they offer a way to conduct transactions without intermediaries. The idea is to replace currencies, making transfers simpler, faster, and cheaper. Payment tokens offer security and transparency. Each transaction is recorded on the blockchain, preventing forgery. Fees are lower than other systems. Each transaction is recorded on the blockchain, which eliminates the possibility of forgery. At the same time, the fees are significantly lower than those of traditional financial systems, especially for international transactions. In addition to transfers, payment tokens are becoming increasingly popular as a means of payment. Today, you can use them to buy goods, pay for services, book tickets, and even in some cafes and restaurants. So, payment tokens not only simplify the process of transferring money, but also open up new opportunities for financial interaction. They are becoming a universal tool for fast, secure, and accessible payments all over the world. Let's talk about hybrid tokens. These are unique assets that combine the functions of different types of tokens, offering users flexibility and versatility. One bright example is Solana. This token is used to pay transaction fees on the network and also provides access to projects developed within the Solana ecosystem. Hybrid tokens offer more possibilities than just payment or utility tokens. For example, Solana simultaneously supports the network's infrastructure, serves as a means of payment, and provides access to various services. Hybrid tokens act as a bridge between different categories of cryptocurrencies, offering functionality on multiple levels at once. It's a versatile tool that fits into any use case. Thanks to their versatility, hybrid tokens provide ease of use. Users can use them for payments, investments, or accessing decentralized projects. Thus, hybrid tokens are a step forward in the development of cryptocurrencies. Users can use them for payments, investments, or accessing decentralized projects. Thus, hybrid tokens are a step forward in the development of cryptocurrencies. They create new opportunities for users by simplifying interaction with blockchain ecosystems. Now let's talk about meme tokens. These are cryptocurrencies that are often created as a joke or based on memes, but sometimes their popularity skyrockets. For example, Dogecoin and Shiba Inu are the two most well-known meme tokens. Dogecoin started as a parody of Bitcoin, but thanks to community support and internet culture, it became a phenomenon. And Shiba Inu is a kind of competitor to Dogecoin, inspired by the same breed of dog. Meme tokens are known for their volatility. Their value can skyrocket thanks to social media buzz, but it can also plummet if interest wanes. For example, Dogecoin skyrocketed in price when it was endorsed by Elon Musk. But after the hype died down, its value dropped significantly. This is a vivid example of how public interest directly influences meme tokens. Meme tokens can be fun and enticing, but they are high-risk assets. When investing in them, it's important to understand that their value is based on popularity rather than technology or economic value. In conclusion, meme tokens are a part of crypto culture that attracts attention with its playfulness. But remember, it's important to stay vigilant and assess the risks before investing. Now let's look at asset-backed tokens. These are cryptocurrencies that are tied to real assets such as gold, real estate, or even stocks. They allow you to digitize real things and invest in them without having physical ownership of those assets. An example of such a token is Paxos Gold, a token that is tied to the price of gold. Each storage location of Paxos Gold is equivalent to 1 ounce of gold, making it a reliable tool for investing in precious metals. Asset-backed tokens provide the opportunity to invest in resources like gold or real estate without having physical access to them. This is a great option for those who can't afford to buy a whole bar of gold or real estate, but they want to be part of these markets. What's important is that asset-backed tokens simplify the investment process. For example, if you want to invest in real estate but can't afford to buy an entire property, you can purchase tokens that represent a share of that property. All of this is made possible by blockchain technology, which ensures the security and transparency of transactions. Asset-backed tokens allow you to invest in various assets without being limited by geographical location. This opens up access to international markets, which was previously only available to large investors or those who had the means to purchase physical assets. Let's move on to the next type of tokens, gaming tokens. They have become very popular due to the merging of gaming and financial technologies. These tokens are used to purchase virtual items, upgrades, characters, and to trade assets within the game. An example of a gaming token is TLM from the game Alien Worlds. This token allows players to buy various items and upgrades that help develop their assets in the game. Gaming tokens have gained particular popularity thanks to the GameFi industry that combines games with blockchain technologies. In such games, players can not only have fun but also earn real money through virtual assets. In some games, players can earn real money by selling or exchanging gaming tokens for cryptocurrency or fiat money. This opens up new opportunities for users who want to earn income from their gaming achievements. Tokens are not just digital assets. They are changing the very approach to the economy, creating new opportunities for interaction with the real world. But how are tokens connected to the real economy? Many companies have already started using tokens to provide real assets, services, and rights. This is called tokenization. For example, a company's shares can be tokenized, making it just as easy to trade them. Like cryptocurrencies, this opens the door to more accessible investments and reduces the barriers that used to exist in the traditional economy. If you plan to use a token or invest in it, it's important to approach the selection process thoughtfully, mindfully. Let's break down the 3 key steps. First, understand the purpose of the token. What is it needed for? If a token is used solely for speculation, it can be risky. For example, stablecoins are suitable for storing value, while utility tokens provide access to specific services. Choose the one that aligns with your goals. Second, evaluate the project. Who is behind it? What technologies are being used? And what is the project's goal? If the tokens belong to a reputable company with a clear mission, it increases trust. And finally, study the tokenomics. How many tokens have already been issued? How are they distributed? And what usage scenarios are envisaged? For example, if 90% of the tokens are in the hands of the developers, that's a signal to be cautious. Tokens are becoming a real bridge between the digital and real world. They are already being used in finance, real estate, education, and even charity. With the development of technology, we'll see the emergence of even more complex tokens, such as hybrid or programmable ones, which will be able to automatically perform certain tasks. We've come a long way together. Now you know how tokens differ from coins, what types of tokens exist, and how they can be used. From utility tokens that provide access to services to stablecoins that help maintain stability. The world of cryptocurrencies is incredibly diverse. We also learned how tokens are connected to the real economy. Why are they becoming a bridge between the digital and physical worlds? Tokens are changing the approach to finance, investments, and even ownership of assets. It's not just a trendy fad. This is already the present, which influences the future. So what should we do next? Keep exploring the crypto world. Knowledge is our main asset in this rapidly changing field. The more you learn, the better you'll be able to take advantage of the opportunities that tokens and blockchain offer. If you're just starting to dive into cryptocurrencies, don't be afraid to take those first steps. Start by studying proven projects, learn about tokenomics, and try small investments. The main thing is to always remember that your success depends on how deeply you understand what you're dealing with. Thank you for watching this video. Subscribe to our channel, like and share this episode with your friends who also want to learn more about cryptocurrencies. In the next episode, we'll talk about NFTs, what they are, how they work, and how they can change the market for art, music, and other assets. Don't miss it! Wishing you success, and see you again at the Alton Academy.